It to the clouds. Everyone can download. Perfect. All right. So everyone, I have Thomas Sheridan, otherwise known as Tom from Goosehead Insurance. Tom, thank you for jumping on today.
Yeah, thank you for having me.
Of course, of course. For those of you that haven't had the chance yet to work with me, you may not know, but I've got a pretty good history here with Tom. I've known him for several years. He does my personal business as well as some friends and family, and he's kindly offered to share some insights today that I think are going to be valuable for buyers agents, sellers agents, and home buyers alike. And share his insights specifically on insurance. So Tom, one of the things that, I find most interesting about, home insurance is it's one of the processes in the, overall home buying slash lending process that people don't really think about beforehand. Buyers agents, sellers agents, so on and so forth. But it's very important, as you know, right? And, it can influence, everything from, total expense for monthly payments to debt to income ratio that can potentially push things over. So, from your perspective, as an insurance agent, like what are you seeing out there that's really pushing, things to be more expensive on the insurance side?
Yeah, it's a good question. I mean, there's a few hurdles every now and again that we come across. The big ones that factor into the cost of the insurance are the age of the home, the age of the roof, and then the type of the plumbing system. The plumbing and the electric can actually just be they don't influence the price so much as they do the pure eligibility of the house. But an
Okay.
older roof, for the most part, an older home will drive up the cost. The one that people don't think of, or maybe people assume, is that the insurance is based completely on the house. And in actual fact, it's probably based just as much on the buyer as it is the home. So the insurance company will look at a credit score, and that can take into account anything from credit to length of time the client has had insurance, to the type of insurance, to the liability limits, to the number of claims that they've had. And that can actually impact the score or the pricing of a policy more than the actual home itself. So all of it factors in where, Ian, if you and I were buying the same house, we could write the identical policy. We would have two very different rates because of our individual insurance scores.
Understood. And so you mentioned several things in there, so I want to kind of backtrack a little bit. So, older homes, for those in the Charlotte market, there's quite a few neighborhoods that have homes from the 50s and 60s. Um, that alone, the age of the home itself is not necessarily the issue, as I understand it. It's more so things like roof, HVAC, as you said, the plumbing, like what is the plumbing made of, so on and so forth. Is that more of the correct understanding, or is it also the age of the home as well, in addition to those things?
The age will factor in slightly, but you're right. It is more the age of the actual appliances in the home or the systems.
Okay.
An older roof can be a challenge. Most
Yeah.
of our insurance carriers, we probably have about 40 or so that write in and around the Charlotte and North South Carolina area here. Most of them will stop eligibility on a home once a roof hits 15 years of age or older. So, an older roof, while they do rate on the roof age and it can make a policy more expensive, it actually can be a bigger hurdle from a pure eligibility standpoint. Once a roof hits 15 years old or older, our options actually drop probably from around that 40-ish number down to about four or five. And obviously, once we're dealing with less options, pricing usually follows.
Yeah, so the roof is, I feel like that's a hot topic because, when people get their inspections done or they even buy their own roof themselves or so on and so forth, roofs are rated for a certain number of years, right? But those years don't necessarily matter in the insurance space. It's more so actual age up to a certain threshold. And so I have had clients come back to me over the course of my career that have asked me, "Hey, is this accurate? My insurance, rep is telling me that the roof's too old, so the policy is going to be much more expensive, but the roof is maybe 12 or 13 years old. So, that rated roof age versus the insurance actual age seems to be a lot of point of confusion for people.
Confusion, frustration too, especially when you have a builder telling you that the roof is rated for 25 or 30-year shingle, and then your insurance company is coming out and saying we're going to cut off eligibility after 15 years. So, um, it's one thing I will say is that you are grandfathered in for the most part. Once a policy they take you on, even if the roof was 14 years old, they're not going to cut you off the next year. That coverage will still extend. But for new business rating, it can be a hurdle.
Yeah,
And I would share a client's frustration as well. Certainly, the roof of my own home is a little older. Um, so it's more just about from our side having a product to be able to offer another option, whether that be full replacement cost on the roof or being able to put a policy in place where the insurance carrier will take it, but they'll say, okay, we're going to cover this at actual cash value. And that
yeah,
changes the coverage on the roof only. But what that does is it basically says that the insurance company would agree to pay out what the roof is worth in its current condition at the time of any loss because of the advanced age. So the client would be getting some money offset back from a new roof, but probably not the amount to replace the roof fully.
understood. So let's pivot a little bit. The roof is a hot topic, but I think you've covered it pretty well. I would love to get some insights on objects around a home that can be relatively easily removed or adjusted that influence the cost of insurance. So, for example, like I'm thinking about listing agents, right, that are prepping their sellers for list. What are some things around the home that if an insurance company did an in-person inspection after a buyer closed would jack up the rates?
So the last point I'll make on the roof, and we'll move on, but the first thing the inspector is going to look at is the condition of the roof. Just because it happens to be a 12-year-old roof doesn't necessarily mean that they're going to be happy with it. If there is severe granular loss or there's moss growing on it, I can
Yeah.
guarantee you any inspector that goes out to the house, it's the first thing they'll put eyeballs on. The
Can I
other one
stop
that
you
comes
right
up,
there? I actually have a question. So how
yeah,
sorry to cut you off, but I'm curious. How is the inspector going to inspect the roof? Are they going to ask for the homeowner's permission to go up there on the ladder? Are they doing a visual inspection? Do they have drones? Like what is the technology being implemented by these inspectors?
they're using all the above.
Okay.
And we have had inspectors absolutely go up on the roof. And a lot of the times we see photos in the inspections that are taken from the roof.
Hmm.
More and more these days are using drones.
Okay.
And, if the roof is in particularly bad condition or there's shingles missing or, it, another thing they really don't like is a patch repair. So
Yeah.
my recommendation, almost if there needs a repair, it's got to be a replacement, at least for the full side of the roof, because nothing waves a flag in an inspector like a 5 square feet area of brand new shingle roof on something else. It's a pretty obvious sign that there was an issue in the past,
Yeah.
and it'll be an issue for the inspector. Most insurance companies will decline it. So the other thing they're doing with drones right now is drones and satellite data. They're looking at tree cover and tree overhang. So a lot of companies are starting to move away from that. So what we're seeing now is if there are branches or large limbs overhanging the roof, it's becoming more of a flag for the insurance carriers. So sometimes before they even offer a quote on the policy, more and more are adopting technology now where they'll have a look down and see the percentage of the roof that is covered by overhanging tree limbs. If it gets to a certain threshold and it changes between carriers, some will just decline to offer the coverage. So if you're asking for listing agents and we know that there's significant tree overhang, or especially if there's any individual tree actually making contact with the roof, before it ever goes to market, my strong recommendation would be to cut that back. Clearly, the
Sure.
trees are part of the property. It's one of, I think, when I'm looking at a home, one of the most beautiful parts of a house. We don't want to take the trees away, but if we can reduce the amount they're actually overhanging the roof, again, we just reduce the chances that the inspector is going to come back and flag something for us.
Got it. And so, kind of going back to the original question, so when listing agents are preparing a home for sale, that seems like a relatively straightforward thing to ask is, cut back some branches. That's something that most people can probably do themselves if it's actually touching the roof, right? Just because it's proximity. Not that we're advocating that you jump on a 20-foot ladder and potentially hurt yourself,
No.
but just, throwing that out there, right? But what other objects around the house? Like, I think when we were preparing, to do this, something I mentioned to you was like something like a trampoline, for example. I know that's not an object that touches the home. Sometimes that can be something that's left over. And you see less and less of these types of things these days, but let's just play devil's advocate. Let's say a seller has some kids. They don't want to take the trampoline to the next home, too much hassle. That's there, and all the listing pictures and everything like that. So when you're writing a policy, is that something that plays into the buyer side when you're quoting, or is it understood that this is an object and can be removed?
No, trampolines are a good one. They're another eligibility issue for some insurance carriers. Some don't have any problem with them whatsoever. They just need to be notified. It doesn't affect the price. Others will just not offer a policy if a trampoline is on the premises. What I can say is that almost none of my carriers would accept a trampoline if it is not fenced in to the backyard, similar to a pool. They
Right.
want a fence surrounding it. The way they're looking at that is it's a liability concern that anyone in the neighborhood, or it could be an attraction for a kid wandering down the street to go jump on the trampoline. So they want to see there some sort of fence or lock gate. The same would go for a pool. Pools Pools are absolutely fine with all of our insurance carriers.
Okay.
Um, again, as long as there's a fence in place. What they don't want to see is a diving board or a slide. If we have a diving board or a slide on the pool, we don't really have a home for it without getting very expensive. Take that away.
Right.
That'll be an issue. The other one that comes up every now and again is handrails or fencing on an elevated deck or a porch or even the
Yeah.
steps up to the front house. If you have more than three steps up to the front house and the insurance companies are paying an inspector to go find something wrong, which is again really frustrating. The first thing they're going to flag is if there's more than three steps and no handrail. That'll be something that comes back, and it's such a frustrating thing for a policy to be put in a pending cancellation for. So if anything's more than 3 feet off the grounds, usually they're going to want to see some sort of banner, fence, or handrail.
Got it. And I guess a question to kind of follow up, with regards to pending cancellation policies, these buyers on the buyer side, they're going to be getting their policies issued, during their lending process. They're going to close and they're going to think this is my premium. And then these inspectors are going to potentially be going out and seeing the property and doing the visual inspections as they sometimes do. And so then, the client can get the email that, we're talking about with the pending cancellation because of something like that. How often would you say, and I know you're probably gonna have to ballpark it, but how often would you say that that is possible that, percentage wise, clients close, they get everything, with the home purchase done, and then like a couple weeks later, that type of thing pops up. Like I would assume that steps and such would be visible during the time of because the listing pictures and everything. I would assume all that's um,
Sorry,
going to be.
my motion sensing lights just turned off, but they're back on now.
You're too you need a little bit more color, my friend. I didn't quite see you there. But no, but seriously, like how often would you say that after the fact these things happen?
So it's definitely our job to make sure that we are trying to get ahead of as much of this as possible.
Yeah.
We do lean on realtor websites and pictures for a lot of our visual information that we're taking in about the property. Um, we're getting very good at addressing roof age where that could potentially be a concern. If we see missing handrails, we're going to advise the client, that's something that we're going to want to get done immediately or have the seller do before we move in. If we see a slide, a trampoline, a diving board on a pool, all of these things is our job to try and get in front of. I don't want an inspector to come out there and ever put a policy in jeopardy. And we have carriers that are more lenient or more strict on certain things. So we can definitely advise a client, listen, this might be the cheapest policy out there, but the chances of pending cancel are pretty high.
Yeah.
We might recommend you go in a different direction unless you're absolutely convinced that this is going to be taken care of before closing. So we don't have a huge hit rate on a pending cancel that comes back on an inspection. Um, Hopefully, because we get in front of it before it becomes an issue. Every now and again, we can't see something from the pictures, or the buyer isn't aware of something, or it's not visible. Certain types of plumbing, or the fuse box um, is there instead of a circuit breaker. So, in those situations, it's our job to work through it with the client and to try and get it remedied as quick as possible and communicate with the underwriter. Um, in most cases, an insurance carrier will give you 30 days or more to make the changes. They would like to take the business for the most part, but they just have the requirements. So there are things that can be done, especially if it's a relatively simple fix, like installing a handrail or taking a slide away or getting the trampoline off the premises. And then our service team would pretty much work with the client every step of the way to make sure underwriting is getting updated and the policy is fully reinstated. Um, in the event that's not possible, we can always rewrite the policy. The benefit of having quite a few insurance carriers on the platform is that we can go in a different direction. But for the most part, I would say less than 1 in 10 comes back with any sort of issue on the inspection because we try to be proactive about getting in front of those hurdles.
Understood. I my last home purchase, I remember when the inspector came to my property. My house has a like a stove, like a fire stove, like
Yeah.
for a fireplace, and it was touching some material, and the guy's just like, "Hey, I have to take pictures of this room. If you could just move this out of the way, that'd be great, because otherwise your insurance premiums are gonna go through." So I do feel like the inspectors are relatively informative when they go out to the properties and talk about remedies that could potentially fix a problem that they may identify. But it's good to hear that, before we even get to that point, that you and your team are kind of looking these things over to try to mitigate those potential challenges that may come about. A question that I think a lot of people have, and if you look online, there's a lot of kind of mixed response to this. So, I'd love to hear from you, the expert, but um, obviously it's possible that a seller has had a claim on the property, right? Some sort of insurance claim. They've had a fire, some sort of flood damage. Something has happened. Especially if you have an older home, there's a chance that something has happened in the past, right? So my question for you is it's both part for the sellers and part for the buyers, but mainly for the buyers. Are they going to run into a challenge because there's been a claim put on that property by someone before them?
They could, and it depends on the insurance carrier. Some insurance
Okay.
carriers will only pull claims for the buyer. Some will pull them for the risk address and the buyer,
Okay.
but simply not rate on any claims that don't belong to the buyer. So we're aware of them, but they're not impacting the premium. If they're a
And when
significant claim,
Go ahead. Sorry, I didn't mean to cut you off.
no, if they're a significant claim, they may just withdraw the eligibility for the policy.
Okay. Yeah.
And then there are some that will rate on the claim as well, even though it's not the buyer. But for the most part, those are very few. What
Yeah,
can happen
sadly.
and what I see online is that the buyer has a claim 2 properties ago and they're still getting rated on this new house. And the question I get is why it's not even on this property. Any insurance carrier, and it's between 5 and 7 years in North Carolina, the look back period will take
Yeah,
into account claims on the buyer's history.
understood. And I think you answered my question, but I just want to make sure I got it down. So it's not necessarily that the rate will be affected by a seller claim. It could just be property eligibility as a whole.
It could be, and the ones that really flag that are water damage.
Yeah.
Insurance carriers really do not like water damage. So if it's a significant claim, or absolutely if it's still open, um, there can be hurdles with getting the insurance. We always want to be making sure any claims either on the buyer's record or on the
Yeah.
home are closed. Any open claim makes it almost impossible for us to place insurance on a property.
Yeah. Now, something that's actually come about. more recently, like within the last year and a half, I never really had this question prior to Hurricane Helene. To be honest, I've been in this business 11 years, and this question has come about more often than not recently. Um, a lot of clients are concerned about potential flood issues because of hurricanes now. Hurricane Helene for North Carolina and Georgia was a very vivid reminder of like
Yeah.
places not in flood zones can have flood damage, in a once in a lifetime event, right? And a lender, on my side, we don't require flood coverage on properties that are, that type of flood zone or not even in a flood zone that just get super unlucky by, a natural event, right? So for clients that are, trying to protect themselves from some sort of potential, event like that, is there flood coverage for them that's relatively inexpensive for that type of scenario? So think not in a flood zone, not in a 500-year plane, just them trying to be careful. What does that look like on the market right now?
It always depends on the property. Each individual property gets rated. Flood is much more based on the property than the actual individual,
Understood.
unlike homeowners. But assuming we're in an X flood zone, and it depends on the type of flood policy. There are two. There's the NFIP program, which is the FEMA-backed option the government will issue that maxes out at $250,000, no matter the value of the property. Or there's the private flood insurance, which will match the value of the property no matter what that is. If it's a $550,000 home, we would have the option to put $550,000 of coverage on there. Um, Normally, in a non-high risk flood zone, you'd be looking between $400 and $750 a year
Okay.
on flood insurance. If that house is in a flood zone, that can move over 1,000, 2,000 very quickly. And the sky is unfortunately the limit depending on the type of flood zone or the type of structure.
Yeah.
Um, the foundation of the house will play an impact on that at that point, if it's on a slab versus if it's on a raised crawl space. And if we get down to the coastal areas versus if it's on a raised foundation, 8 feet in the air.
Yeah.
So all those factors would play into it. I actually probably write more of my flood insurance in the mountains. And it's one of the things we talk to clients about. But even though you're not in a flood zone, water tends to run downhill.
Yeah.
So when you get onto the property, we always advise clients have a look at the runoff. And if there are any concerns, always give us a call.
Yeah. That's cool. And just to kind of gauge the cost here, I mean, I know you give a range, but what is like for that type of flood zone, what is the private insurance usually the cheaper side, or is it the FEMA backed insurance that ends up on that lower tier of that cost that you gave?
That really fluctuates depending on the appetite of the private provider. Recently, especially since Helene, FEMA rates have increased. Um, so it is more up in the air as
Yeah.
to who might have the more competitive option. And that really is just on a case by case basis and for the amount of coverage that you actually are looking for. Well, as I said, once it goes above 250,000, the NFIP program wouldn't provide any additional coverage.
Understood. And the last couple questions here. One of the questions that I felt was important to have is like, what are you seeing in the landscape right now? We kind of talked about flood stuff, but that's not really the focus of this question. But what are you seeing right now that's changing how insurance is being done in North and South Carolina? Like, what are the main things that you've noticed that's different from when you moved down here and got your business started to today in 2026 in May?
I think we've touched on the roof quite a lot, so I'm not going to go back there, but we had a lot of carriers that would take a 25-year-old roof 4 or 5 years ago. Now the average is 15. The other one that we come across a lot, and it is a barrier for us, is polybutylene plumbing. Polybutylene plumbing was relatively prolific during the late 80s and 90s.
Yeah.
If a house is built in the 80s or 90s, the first question I'm asking is, what is the plumbing made out of? So whether it's a buying agent helping a potential buyer or a listing agent, and we know that the age of the home is within those 2 decades, the first question I'd be asking is, do we have polybutyl? And the bottom line is there's no insurance carrier in the market right now in North Carolina, South Carolina, or Georgia that wants polybutylene plumbing. We
Okay.
have maybe one option, two perhaps in the entire three-state area that would take it. Usually that's not a very good looking policy. We use it as a short-term gap in order to get the house to close and get the plumbing out before we put a different policy in place. Um, so that has definitely shifted. We had probably four or five options again 5 years ago. We have zero good options now. Um, the biggest thing that we've seen in the last 18 months post Helene is the deductibles that are now
Hmm.
starting to change. It used to be the further south you got, the wind and hail deductible came more into play. North Carolina was relatively immune. We never really saw a percentage-based wind and hail deductible 3 or 4 years ago. Now it's becoming the standard, a 1% minimum wind and hail deductible, which basically means if the home was insured for $500,000, 1% of the home's value would be $5,000, and that would be the deductible for any wind, hail, hurricane, tornado damage on the home. Some carriers are mandating a minimum of 2%. So it is becoming much more the norm for us to have to recommend a 1 or 2% deductible with certain carriers. Whereas something that was maybe something we only saw in Florida or Georgia. And then a couple of years ago, that was pretty much the norm in South Carolina. It's now becoming the norm in North Carolina as well. So it's something clients should probably be prepared for or at least discuss. We still have plenty of options that don't quite enforce that yet, but it's trending that direction.
Got it. And then I guess, just to kind of keep with the theme of why I wanted to bring you in today, again, buyers agents, listing agents, we talked about several things that affect them, their sellers, their buyers. If you could give a couple tips, just off the top of your head for agents, for things that they might need to, should learn or should know or should communicate to their buyers or their sellers, like, aside from the obvious, stuff that we talked about today, but what would you, share as a couple high level ones?
The questions we ask off the bat are, what's the electric system made out of? Are there circuit breakers? What's the plumbing made out of? How old's the roof? And the big one that can actually disqualify a lot of buyers, do you have any dogs? Because there are certain dog breeds that the majority of carriers just simply will not take. And we're talking, for the most part, pit bulls are the ones that we come across quite a lot. Um, so those are the big ones. And usually the more information that we have, the better job we can do. So we always do a consultation with the clients. It's usually a 20 or 30-minute call, but there are a lot of times when I'm getting off of that call and the buyer hasn't known the answer to any of those questions. And it's not necessarily a hurdle, but normally we can put them in a better place. And so I'm getting on the phone to a listing agent and asking those questions myself. Sometimes the listing agent doesn't know. And those are the instances normally when now it's 50-50 when they go out there and do an inspection that there's going to be an issue because we just didn't know what
Yeah.
was going on. So we have a fiduciary responsibility to answer these questions to the best of our knowledge. Um, so the more information, and we have a home buyer checklist that a lot of our partners we hand that out to. So when they are taking buyers around, we'll give them this, and it's 4 or 5 questions that they can go into an open house or a listing and say, "Hey, can you answer these for me to put me in a good spot?" But um, you know, information is king, especially when we have some options, and normally that helps us put the client in a better position.
Yeah, no, I agree. I think from a lending perspective, we're not here to prevent people from buying homes. We're here to mitigate potential things that could come up that could cause problems when people have money at risk, right? So like I always share with clients up front, like the more I know, the better. And I would assume that's the case for insurance too. If someone's trying to be a little sneaky about, what's in the property and then, the inspector goes out at a later date and then there's premiums skyrocket to make it unaffordable. That'd be good information for them to know ahead of time before they bought the home, or just to get a better carrier that would suit that need better, right?
Yeah, and we look at carriers, we look at the feedback we get from all of our clients too. So, we know who are dealing with claims in a professional manner. We know who have a strong reputation. We know some of those that perhaps cause a little bit more frustration.
Yeah,
And we can definitely make those disclosures to our clients. It's part of our job to be a good broker to make sure we're putting them in a good position. Um, but yes, information is absolutely key. And again, if we know most of the details going into it, we can usually make a pretty good recommendation and also manage that premium as well.
understood. Well, I think you've covered a lot here, and I appreciate you jumping on. Hayden, I see that you are still around. Was there any questions that you had for Tom? He is here. He's available. He can answer any questions that you might have. Of course, I'll be sending out the recording per usual after the call, but is there anything that you heard that you were curious about?
I did not. I just joined late and decided to stay around and just got some really great information, just kind of being a new agent and just hearing about this. I'll wind up in Florida too, so it's good stuff to kind of keep in mind for the flood insurance and all of that and hurricanes. So,
Yeah. Awesome. Well, listen, I appreciate you joining. Tom, there's a couple others that just hopped off, so if they have any questions, I'll direct them your way. But I do want to say again, appreciate you, jumping on the call today and sharing your wisdom. Would love to have you back sometime with a little bit more attendance, get you some good airtime, and do a proper PowerPoint presentation, the whole nine. But it means a lot that you jumped on today.
No, thank you very much for having me. I'd be happy to do it. And yeah, if anyone has any questions, please feel free to share my email or details. I'd be happy to answer those as well.
Wonderful, wonderful. Well, listen, you have yourself a good day. Hayden, you as well. And y'all have a good rest of your week, okay?
Thank you, Ian.
thank you, you
Of
too.
course.
Bye.
Bye.